Hi, now we'll take a little look here at more on the trading risk in the markets. This is the silver ETF, which is it trades just like a stock, but it follows silver. So you can trade silver, trading the silver ETF. It's just like trading shares of stock. Now let's say for some reason we decide to sell on this bar, you decide to sell on this bar, whatever. I put out the trade in my newsletter on this bar, and that would be right around $30. I'm just going to round off the numbers. It's 30.54. It looks like it closed out there, but we'll just go with $30. And then if we would have put our stop, say, back at this pivot high, and that's $34. So we were going to risk $400 if we bought 100 shares. Um, and that's not really too bad a risk if you really, if you got your reasons for thinking this is going to go lower, which it did. But okay, now on this trade, then it started going against us. Again, if you had a smaller account and 100 shares, it might be pretty hard to hold here because all of a sudden you're a couple $100 behind. And looking on this chart right here, you think, well, that's no big deal. I could have held that. But in real time, when it's real money, and you see this explode up here, and you just think, oh my God, silver's going to go to the moon. I got to get out of this trade. Well, again, let's just say that instead of trading 100 shares, you traded 1,000 shares, or this move against you would scare the heck out of you. And let's even up it more. Let's say if you traded 10,000 shares. Well, if you went short 10,000 shares on this bar and this exploded against you here, just the look of the chart would scare you out of the trade and you'd be behind $10,000. Even if it was only $1 a share, a couple dollars a share, you'd be ahead 10, 20, you'd be behind $10 or $20,000 on the trade already. So it would just scare you out of the trade. Okay, now let's take a look, and let's say you're just practice trading. And as far as I know, you can just buy one share if you want to. I'm sure that that's true. So let's say you're just practicing trading, and you just buy one share at $30.54, $30 roughly, and then you're going to hold it if it until it goes against this pivot high, up above this pivot high. So that would be about 34. So if you're trading one share and it moves $1 against you, you're just going to look at that and you're going to go, that's nothing. That's a dollar. I'm not going to get scared out of this trade. So it's just obvious. And again, I know everybody knows this, but I'm trying to drive home the point because sometimes you got to really just think about it, put it down on paper, and just say, can I handle this if it goes against me? And you gotta sometimes you gotta just force yourself to trade less shares. Like I said, if we went short 100 here in the newsletter, let's say I recommended short 100 shares, and you said to yourself, well, that's really too much for me, but Jim says short 100 shares, so I'm going to do it. If you're having a question mark about it in your mind, don't do it. Trade 50 shares, trade 20 shares, trade 10 shares. Again, it's a good learning experience. If you traded 10 shares on this and it went against you $1 a share, that'd be $10. You could handle that risk, and then when you held that trade and it fell off here, you'd only make, if you made $2, $3 a share, you'd make $30, but on 10 shares. But the thing is you would get that experience of trading it and holding it and seeing how the market works. So don't be afraid to trade lower amounts, especially in the beginning, and even for bigger size traders that want to trade 1,000 shares. I would always go with a lower amount unless you're just absolutely sure. You'll get to the point where someday, if you're not there yet, but if you are a professional trader listening to this that knows the risk, has the money, well then you'll know what risk you can take by then. But for most people in general, I would say always go with lower risk than you think you can originally take. So even if you think I can handle 100 shares, I would go with 50. You don't have to make it all on one trade. This is a long term trading is a this is a long term ordeal trading. It's not going to be made or broke on one trade, and trading is a marathon. It's not a sprint. It's going to be made on trade after trade after trade after trade. So you don't have to make big amounts on one trade. There's always another good trade. That's another thing that gets people They think this is the biggest trade of my life. I got to get in on this trade. Silver's going to go to the moon. Silver's going to collapse. I got to get in on this trade. The thing is, these markets are moving every day. There's always an opportunity. You never miss out on the biggest trade of your life. And even if it was the biggest trade ever, you don't have to think that way. You just have to make a little bit of money on a consistent basis, and the risk is the thing you have to watch. So I'm gonna go into that again on the risk thing in another video here in a second. So thanks for watching this video, Jim.